Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. The break above the third of three resistances, which was the neckline of the February to April 2023 Head and Shoulders continuation pattern, currently at 84.52, back at the start of March, was the beginning of this recent move higher. This resistance was breached and broken, with the rise originating from the base of the congestion between 83.46 to 84.40, containing the September 2012 high at 84.24, the February 2013 high at 83.50, as well as back then the long moving average, currently 86.80, and also the medium moving average, currently 90.77. The initial journey upwards was a tortuous one, yet the market built on the congestion below 84.40, plus the short medium moving average back then, which was currently at 96.16, and finally a golden cross at the start of March that all staged an eventual move up over this neckline. So what happened next? Well, there are two parts to this answer. Back 11 weeks ago I said the following, and I quote, "If the action of the last 3 weeks," so that is 14 to 11 weeks ago, if the action of the last 3 weeks may have left us with a question, is this action a bullish halfway hesitation or is it a potential double top? End of quote. Well, this pattern became a bullish halfway hesitation, and both the primary target and the harder to reach secondary target were achieved. Since then, prices continue travelling higher, and indeed, we have last week made new all-time highs. The second part of the answer, though, has been the treatment of the action over the whole of March. In that, we made a beautiful, if very acute, March-based bullish Andrews pitchfork, highlighted in dark blue on my daily chart. The market followed this bullish pitchfork, creating a pipe top in late April, but still moving higher until last week when prices broke up and out above the upper time, currently at 10.948, at a far steeper angle than even the bullish Andrews pitchfork was. I asked the question last week, and I quote, "Does this mean that the pitchfork has finally failed?" Well, not necessarily. You see, it is still early enough to just be a bridge, and we could see prices back down within the pitchfork again soon. End of quote. Guess what? That is exactly what happened, with prices from Wednesday last week moving back within the dark blue bullish pitchfork, even testing the lower time last Thursday. That's currently at 10.284. One final point, and that is to consider the hesitation of the end of April into early May, around the stratified levels between 97.50 to 99.95. Could this be a possible halfway hesitation? It certainly has elements of such a pattern. As last week I placed a provisional target X in the 11,200 area overhead as potential for such a pattern, just in case. LME 3-month aluminium. The move higher over March, April and even May originates back in late February, with the market breaking higher from a diamond pattern type formed between late October 2023 to late February 2024. I grant you was not the best looking diamond pattern type, but as I said repeatedly back then and ever since, it had merit, especially on the break higher. However, the market took its own sweet time in moving up to the topside targets, but get up there, they did. The next feature was something I pointed out 10 weeks ago and ever since, a bullish bow tie formation of the moving averages. Now, this was due to kick in between the 9th and the 16th of April. As you can see from the daily chart, in between those dates, on the 15th of April was when we had the big spike higher that ended up as an indecisive doji cross of all things. This huge move showed the topside extent of the market for the next few weeks. As part of this move higher, we had a gap move up over the weekend between the 12th and the 15th, and we spent the rest of April and early May gradually moving down to fill in this gap, which was done early 2 weeks ago. Since then, prices started moving back up through the high on the 15th of April at 27.28. Now, I spoke on this 3 weeks ago when I said, and I quote, "We need to see the gap in mid-April between 25.12 and 25.35. We need to see this filled, and relatively soon." If after this the market continues lower, then recent action will have been a peak. If not, then this may become a staging point, even a possible halfway hesitation for a move higher. End of quote. Okay, so before I indicate the opportunities for a bullish halfway hesitation, I would point or would note the stumble the market made in its tri-higher last week, seemingly failing at the same level as the 15th of April with the overhead resistance of the 50% Fibonacci line of the November 2015 to March 22 move at 27.53. Though this time also ably capped by the dark blue highlighted middle time, currently at 28.19, of the recently drawn late April to mid-May bullish Andrews pitchfork. The market was well straddled by the overhead middle time and the lower time below. The lower time currently is at 26.11, especially on Thursday and Friday last week. As I said last week about this bullish Andrews pitchfork, and I quote, "My reason for highlighting this bullish pitchfork is because I would look at these dark blue tines as a guide for the way ahead and for the way higher until they stop working." End of quote. I further added, and I quote, "Okay, so if we were to regard the action since late March today as a potential bullish halfway hesitation, then it does give us potential up to the 29.20 area overhead." End of quote. Now I continued, and I quote here again, "There are a number of roadblocks along the way. Congestion between the 50% Fibonacci line of the 2008 to 2022 move at 26.75, the 2023 high at 26.80. Now the next one is the April 2018 high at 27.18. This stopped the rise in April and is the next one to watch." End of quote. Right now we're approaching once again that April 2018 high at 27.18. LME 3-month lead. The key resistance that kept this market capped during the first third of 2024 was, as I said 11 weeks ago, and I quote, "I suspect the key overhead resistance will be the same as in late January, the congestion between 21.82 to 21.89. End of quote. Now please remember this quote as it become relevant again. This capping action eventually brought forward the idea of the late January to mid-April action making a double bottom pattern type. It is here that I bring back that earlier quote made 11 weeks ago, and I quote, "I suspect the key overhead resistance will be the same as in late January, congestion between 21.82 to 21.89. End of quote. It had been this overhead congestion that capped the market throughout the beginning and middle of April, bar one aberration until 5 weeks ago when prices rode up through the congestion and reached both the primary and secondary targets for the double bottom type on the upside. On its journey higher, the market also reached the primary and secondary targets topside for the handle to the double bottom, as it acted as a bullish halfway hesitation. Finally, let's look again at the elephant in the room, something I've been calling it that for 3 weeks now. It is the bright red highlighted mid-February to late March bullish Andrews pitchfork. Despite the breach of the upper time last week, it's currently at 23.42, this still looks good as the breach with a daily Q reversal down last week and a move back within the bullish Andrews pitchfork has negated the bullish incentive somewhat. However, it looks like the market is this week again threatening the top side. Now, if that breaks, the next big obstacle overhead is the 50% Fibonacci line for the big 2010-2011 move at 23.78. And I'll be very interested to see how the market reacts or does not react to this 50% Fibonacci line, as beyond we have congestion in quite a wide band dating from April 2022.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.